Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, October 16, 2023. Global stocks traded cautiously on Monday while U.S. Treasury yields declined, as investors monitor the volatile situation in the Middle East. Over the weekend, the U.S. held talks with Middle Eastern nations including Iran in an attempt to prevent further escalation of the Israel-Hamas conflict. However, the potential for a wider regional war remains a key concern for markets. In Europe, major stock indexes fluctuated in morning trading. Technology shares faced pressure after reports emerged that the U.S. is considering further restrictions on exports of advanced semiconductors to China. This weighed on tech stocks globally. Meanwhile, energy companies benefited from the recent surge in oil prices, with Royal Dutch Shell hitting a record high. The biggest gains came from Polish equities, which jumped the most since May 2022. The Polish zloty also rallied strongly against the euro. This was driven by exit polls showing a bloc of pro-European opposition parties is on track to win parliamentary elections, unseating the nationalist government. Markets were relatively steadier after last week's spike in volatility and demand for safe haven assets. However, uncertainty persists given the Middle East situation coupled with awaiting key economic data and earnings reports. S&P 500 and Nasdaq 100 futures showed little change after declines last week. The U.S. 10-year Treasury yield rose 7 basis points to 4.01%, clawing back some of last week's drop of 19 basis points. Brent crude oil prices slipped but remained above $90 per barrel, after surging nearly 6% on Friday. Gold prices fell 1% to $1,645 per ounce as haven demand eased slightly. According to Luke Hickmore, investment director at Burden Investment Management, the geopolitical tension in the Middle East remains the key focus of the market. It might seem calmer now, but if the war widens to include other parts of the area, then that means more pressure on oil and more uncertainty for the market to cope with. It's going to be a big driver here. In corporate news, Pfizer shares dropped in pre-market trading after the pharmaceutical giant cut its full-year revenue and earnings guidance. Manchester United shares plunged 18% following reports that a potential buyout bid from Qatar investors was withdrawn. In Asia, stocks were mixed but most indexes traded lower. China's mainland benchmarks fell despite the central bank injecting 289 billion yuan, $39.6 billion, in medium-term loans, the biggest injection since 2020. However, the bank kept its policy rate unchanged at 2.5%. Headwinds are growing in China as the U.S. moves to tighten export controls on advanced semiconductors. Concerns also remain around the struggling property sector. Meanwhile, Japan, South Korea and Hong Kong stocks declined while Australia's ASX 200 closed slightly higher. Looking ahead, traders are focused on upcoming economic data including Chinese GDP figures this week. Key inflation reports from Japan, the UK and the Eurozone are also due. Markets will be watching Fed Chair Jerome Powell's comments for any change in tone following stronger recent U.S. data. According to Nikolaos Panagyurtsoglou, global strategist at J.P. Morgan, there is still lots of macro uncertainty. Markets priced in lots of recession risk in 2022 and priced it out in 2023 as recession has not been happening this year and are now in waiting mode trying to gauge whether a recession could be happening in 2024. In the currency markets, the US dollar index edged lower but remained near its highest level since 2002. New Zealand's Kiwi dollar was the best performer among G10 currencies, rallying after the election victory of the centre-right National Party. Crude oil prices are likely to remain volatile if the Middle East tensions persist. Any major military escalation could significantly impact energy markets and the global economy. For now, Brent crude trades marginally lower around $91 per barrel but remains elevated compared to last year. Overall, while markets have stabilized slightly from last week's turmoil, significant risks around geopolitics, inflation, central bank policies, and China's economy remain. Investors are awaiting fresh catalysts from economic data and earnings reports in the coming weeks to gain more clarity on the road ahead. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. U.S. stock index futures edged higher in early trading after declines last week. The benchmark 10-year Treasury yield rose back above 4.6% after plunging nearly 20 basis points on Friday amid flight to safety. The U.S. dollar index fluctuated around 106.50. In currency markets, the U.S. dollar saw mixed performance against major counterparts. It posted gains against the Swiss franc, New Zealand dollar, and euro. However, the greenback declined versus the British pound, Canadian dollar, and Australian dollar in early trading. The New Zealand dollar rallied after the centre-right National Party won the general election, ousting the incumbent Labour government. New Zealand dollar to US dollar jumped 0.7% to 0.5925. Coalition negotiations are expected in coming weeks to form a new government. The euro trimmed some losses after declines late last week, consolidating near the 1.0550 level against the US dollar. Meanwhile, the British pound advanced toward 1.2200 as pound sterling to US dollar drew some buying interest. Gold prices dropped 1% to $1,910 per ounce, giving up some gains after the precious metal surged over 3% on Friday amid safe haven inflows. Crude oil held steady with WTI futures hovering around $87 per barrel. In Canada, the loonie closed lower Friday, pressured by hawkish comments from Bank of Canada Governor Tiff Macklem signaling further rate hikes. The BOC will release its quarterly business outlook survey later today. US dollar to Canadian dollar was little changed near 1.3650 ahead of the data. Looking ahead, market attention will remain focused on geopolitical developments in the Middle East. Any further escalation in the conflict would likely fuel further volatility in stocks, bonds, oil, and safe haven assets. On the data front, key releases this week include UK wage inflation figures, China's Q3 GDP report, and inflation readings from the Eurozone and Japan. Markets will also monitor speeches by Fed Chair Powell and other central bank officials for clues on the monetary policy outlook. Overall, while markets have steadied slightly from last week's sharp swings, risks around Middle East tensions, inflation pressures, growth concerns, and central bank policies remain heightened. Further catalysts are needed from incoming data and guidance from policymakers to provide more direction. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.